Southwest Florida was America's pandemic boomtown. Prices up 75%, homes selling in days, and more than 60% of deals paid for in cash. But now, the region that once promised paradise is unraveling at breathtaking speed. Cape Coral holds the title of America's worst housing market. With 8% of homeowners underwater and median prices across every major city plunging up to 19%. Behind the headlines, a hurricane that caused $112.9 billion in damage, insurance premiums spiking to $25,000, and a cascade of foreclosures reminiscent of 2008. Everyone thought the Florida dream was bulletproof. So, why is the entire Southwest coast collapsing at the same time? And could it ever recover? The real answers start with how this frenzy began. Sun, palm trees, and a line of moving vans snaking down I-75. Southwest Florida became the finish line for America's Great Migration during the pandemic. Naples, Fort Myers, Cape Coral, and Punta Gorda. Each city saw its population surge as buyers from New York, Chicago, and Boston arrived in search of warm weather, no state income tax, and a shot at affordable beach living. In 2021 alone, more than 60% of all home purchases closed with cash. No mortgage, no contingencies, just wire transfers from hedge fund managers, tech workers, and retirees looking to outrun northern winters. Local agents fielded offers sight unseen, sometimes from buyers who had never stepped foot in Florida. Sellers set deadlines, and bidding wars broke out over canal-front bungalows that had sat unsold for years. Between 2020 and 2022, property values across the region soared 75%. A three-bedroom in Cape Coral that fetched $250,000 before the pandemic hit $440,000 by the summer of 2022. The median price for a Naples home shot past $950,000. Realtors remember listings that vanished in hours, with buyers promising to waive inspections, close in a week, and even pay overappraised value just to win. The cash share, unmatched anywhere else in the country, became the region's calling card. Investors and retirees, flushed with gains from the stock market or sales of northern homes, flooded the market with offers that local families couldn't dream of matching. The migration wave wasn't just about numbers, it changed the fabric of daily life. New arrivals packed schools, filled up restaurants, and turned sleepy subdivisions into construction zones. Builders raced to pour foundations and frame new homes. But demand always stayed one step ahead. Local planners issued more than 50,000 new residential permits in just 3 years, vaulting the region to number 13 nationally for new construction. The promise of endless demand fueled a building spree that outpaced anything since the early 2000s. By late 2022, the question wasn't whether prices would keep climbing, but how high they could go before the music stopped. The Florida dream looked unstoppable, at least on the surface. But as every realtor in Lee and Collier counties will tell you, the fastest booms can set the stage for the hardest falls. Permit offices in Lee, Collier, and Charlotte counties turned into round-the-clock operations as builder demand exploded. Between 2020 and 2022, more than 50,000 new residential permits were stamped, enough to place Southwest Florida at number 13 in the nation for new construction. Cape Coral Fort Myers alone issued nearly 30,000 permits, more than doubling its average pace from the previous decade. Naples, Marco Island, and Punta Gorda added another 22,000 units combined. As every local planner fielded calls from developers racing to break ground, builders described those years as a blur. "We had buyers lined up before the slab was poured," said one Cape Coral builder. Model homes became sales offices, and every new street was a parade of trucks, cranes, and concrete mixers. The backlog stretched for months. In the spring of 2022, listings for new homes sometimes lasted just 10 days before vanishing, many snapped up by buyers who never set foot inside. Local MLS data shows the median days on market for new construction dropped below 2 weeks, a pace usually reserved for the hottest luxury markets. The logic was simple. With demand surging and prices climbing 75% in less than 3 years, every builder with a license pulled permits as fast as the city would issue them. Industry analysts warned of a permit bonanza, outstripping long-term population growth. But few listened. National builder surveys flagged Southwest Florida as a top target for expansion, citing investor appetite and pandemic migration as green lights for aggressive supply. By late 2022, the construction pipeline was overflowing. County records show permit activity at levels not seen since the early 2000s bubble, with some subdivisions approved for hundreds of homes before the first foundation was poured. Local economists at Florida GF Coast University called it an unprecedented backlog. Thousands of homes in the pipeline, many still waiting for buyers. The result, a region built for boom-time velocity, now facing the aftershocks of too much supply, chasing a vanishing wave of buyers. As the dust settled, the seeds of today's inventory glut were already sown, buried beneath the concrete and rebar of a building spree that no one thought would end. September 26, 2022. Hurricane Ian barrels ashore as a Category 4 monster, pushing a wall of water into the heart of Southwest Florida. Fort Myers Beach, Cape Coral, Punta Gorda. Whole neighborhoods erased in a matter of hours. The storm's winds flatten homes, snap power lines, and rip roofs from concrete blockhouses that had stood for decades. Streets vanish under 6 feet of water. Fire stations, schools, and entire blocks of businesses are left as twisted shells or empty slabs. The numbers tell a brutal story. $12.9 billion in total damage, the third costliest hurricane in U.S. history. Thousands of homes lost across Lee, Collier, and Charlotte counties. FEMA's rapid assessment teams count entire subdivisions where every house is tagged for demolition. On Sanal and Pine Island, bridges are washed out, cutting off survivors for days. In Cape Coral, more than 6,000 homes suffer major damage or worse. Fort Myers Beach is nearly unrecognizable, piles of debris where hotels and restaurants once stood. But the storm's impact lingers far beyond the debris fields. Families camp in cars or crowd into hotel rooms, waiting for insurance adjusters who may never come. School districts scramble to consolidate classes as buildings remain shuttered for months. Hospitals treat a surge of trauma, waterborne illness, and anxiety. In Lee County alone, FEMA processes more than 100,000 applications for aid. The region's recovery. Bottlenecks become a daily reality. Permit offices overwhelmed, contractors booked out for a year, supply chains for roofing, and windows stretched thin. The emotional toll is harder to measure. Parents weigh whether to rebuild or leave. Seniors who moved south for peace and sunshine now face the fear that nowhere is truly safe. Conversations at grocery stores and church meetings circle back to the same question. Can Southwest Florida ever feel like home again? The scars, physical and psychological, reshape the region's sense of security. Every summer, as the sky darkens and the first hurricane warnings flash, a new kind of anxiety seeps in. For many, the Florida dream now comes with a shadow that won't lift. Insurance, once a footnote in the cost of homeownership, now dominates every conversation in Southwest Florida real estate. Premiums that hovered around $2,000 or $3,000 in 2021 have exploded to $15,000, $20,000, even $25,000 a year for a typical single-family home. Waterfront properties and older condos face even stiffer bills, sometimes more than $30,000, plus mandatory flood insurance that can add another $5,000 to $10,000. The numbers don't just sting, they close doors. A $400,000 home, once the definition of middle-class aspiration, now carries a monthly insurance burden that rivals the mortgage itself. Agents describe a market where buyers run the math and walk away. "I've had deals fall apart at the 11th hour," says one Fort Myers agent. The insurance quote comes back, and suddenly the house isn't affordable at any price. The problem isn't limited to hurricane-battered neighborhoods. Even new construction built to the latest codes, can't escape the pricing spiral as reinsurance costs filter down through every policy. Lenders are starting to be too, refusing to close loans unless buyers can show proof of coverage, and sometimes rejecting homes that can only be insured through Citizens, the state's last resort insurer. Citizens Property Insurance Corporation was designed for emergencies, not everyday business. But as private carriers exit, Citizens' policy count has doubled in just 18 months, now covering more than 1.2 million homes across Florida. That means every new policy shifts risk onto the collective, raising the possibility of emergency assessments that could hit every homeowner statewide if another major storm strikes. For Southwest Florida, the retreat of the private market leaves buyers with little choice but to accept whatever coverage is available at whatever price the market demands. Homeowners who bought at the peak or those facing renewal after a claim are trapped. Some gamble on higher deductibles. Others self-insure and hope for a quiet hurricane season. But the new reality is clear. Insurance is no longer a box to check, but a barrier to entry. For many, the dream of owning in Southwest Florida now ends not with a bidding war, but with a single unaffordable quote: 8.8 months of inventory. That's the number that keeps Southwest Florida's realtors up at night. A balanced market sits at 6 months. Anything higher means more homes than buyers, and the gap keeps growing. In Bonita Springs, listings linger for 9 months on average. Fort Myers and Cape Coral hover between 6 and 7 months. But the regional mean tells the story. Too many homes, not enough demand. The days of bidding wars and instant sales are gone. Homes that once vanished in 10 days now sit for 90, waiting for offers that may never come. Brokers scan MLS dashboards and see the same pattern. Rows of unsold properties, some on their third or fourth price cut. By the fall of 2025, more than half of all listings across Lee, Collier, and Charlotte counties had dropped their asking price at least once. Sellers who once set the terms now chase the market, down, trimming $10,000, $20,000, sometimes $50,000 just to get a showing. The new normal means negotiation starts the moment a home hits the market. The average sale-to-list price ratio has slipped to 96%, with buyers expecting and getting 4% off list price as a baseline. Gone are the days when sellers could count on full price, let alone over-asking. Now, every offer comes with a request for closing costs, repairs, or mortgage rate buy-owns. This isn't just a luxury or condo story. Single-family homes, townhouses, and even new builds are caught in the same undertow. Builders facing their own glut are sweetening deals with incentives that existing homeowners can't match. The result is a landscape where resale listings compete, not just with each other, but with a pipeline of brand new homes offering upgrades and lower rates. The over-up isn't an abstract number. It shows up in every open house with empty sign-in sheets, every price cut notification in a seller's inbox. For buyers, it's a buffet. For owners, it's a waiting game with no clear end. And as each month passes, the inventory pile grows, setting the stage for the next round of distress sales and deeper price cuts. Foreclosure filings in Cape Coral now read like a roll call from 2008. 1 in every 2,200 homes sits under legal distress, with Lee County's caseload up 60% over the past year. Court dockets fill with default notices and auction dates, each new filing slicing another notch off neighborhood values. For the attorneys who work these cases, the mood is grim. We're seeing families who never missed a payment until their insurance bill doubled, says a Fort Myers foreclosure lawyer. Now they're upside down and there's no easy way out. Cash once ruled the market, but even that lifeline is slipping away. The share of all cash sales, once over 60% at the peak, has fallen to 50 or 55%. That drop isn't just a statistic. It's a signal that investors and deep-pocketed retirees, the buyers who once snapped up listings sight unseen, are backing off. When the cash dries up, sellers lose their last advantage. Each week brings more price cuts, more failed closings, and more homes quietly handed back to lenders. For local investors, the numbers no longer add up. One Cape Coral landlord who bought a duplex in 2022 for $620,000 now faces a property worth less than $520,000. Insurance premiums have soared past $18,000 a year. Tenants are scarce, and the monthly rent no longer covers the mortgage, let alone repairs. He's stopped answering calls from the bank, hoping for a miracle that never comes. Across the street, a Fort Myers family packs boxes after receiving a final notice. 3 missed payments, no buyer, and no path forward except foreclosure. Every distress sale becomes the new benchmark, pulling down appraisals for entire blocks. As comps fall, more owners slip underwater, fueling the next round of defaults. The feedback loop is brutal and efficient. Each foreclosure begets another, compounding the pain for neighborhoods already battered by storms and soaring costs. The market's foundation, once propped up by cash and confidence, now cracks under the weight of forced sales and eroding trust. Realtors across Southwest Florida reach for softer language as the headlines darken. "What we're seeing is a healthy correction," insists one Naples broker. The market is rebalancing after an unsustainable run. Buyers finally have choices. Sellers just need to be realistic. Industry updates describe renewed balance, opportunity on both sides, and a return to fundamentals. But the numbers cut through the spin. Median home prices in Naples have fallen 19.2% since the peak. In Punta Gorda, the drop is 18.6%. Cape Coral, Fort Myers sits 13.7% below its high, with some neighborhoods faring even worse. The pain isn't limited to price charts. Lee County's foreclosure filings have jumped 60% in a year, echoing the darkest days of the last crash. Cape Coral now leads the nation in underwater homes, with 8% of owners owing more than their properties are worth. Every new foreclosure becomes a fresh comp, pulling values down for the entire block. One attorney, who's worked both cycles, puts it plainly. "We're seeing the same spiral as 2008, just with different triggers. Back then, it was bad loans. Now, it's hurricanes and insurance. The effect for homeowners is the same. Industry voices point to tighter lending standards and lower overall underwater rates than the last crash. Facts that matter, but offer little comfort to families who bought at the top. The gap between official statements and lived reality grows wider with every distressed sale. For owners who watch their equity vanish, the word correction feels like a cruel joke. The parallels to 2008 are hard to ignore. Cape Coral was ground zero then too. Foreclosure capital of America, neighborhoods gutted by speculation and collapse. The difference now is structural. This isn't a bubble built on subprime loans and easy credit. It's a crisis shaped by climate, insurance, and the permanent repricing of risk. The question isn't just what the market will do next, but whether the old rules still apply at all. Naples and Cape Coral, separated by just 40 miles, now exist in different financial universes. Naples, once the poster child for the pandemic boom, has seen its median price tumble 19.2% to $767,800. Yet, the city's skyline keeps rising, with $70 million condos and $35 million beachfront villas still trading hands. In the same week, a penthouse closes above the Gulf. A Cape Coral 3-bedroom sits unsold after its 4th price cut. In Cape Coral, Fort Myers, the median price has dropped 9.6% to $375,000, down 13.7% from the peak. Fort Myers itself is off 12.2%, Punta Gorda down 14.5%. Every city in the region is bleeding value, but the pain is sharpest in the middle tiers. The homes bought with borrowed money, not trust funds. Builders facing their own glut are fighting for every buyer. Incentive sheets read like wish lists. 5% mortgage rate buy-owns, $50,000 in upgrades, closing cost assistance, even backyard pools thrown in. One Cape Coral builder standing in a half-finished model home puts it bluntly. "We can offer what existing owners can't." If you're selling a used house from 2005, you're not going to beat hurricane glass, new roofs, and a warranty. The gap is more than cosmetic. New builds come with lower insurance premiums, modern storm standards, and the promise of a fresh start. For buyers, the math is simple. Why pay more for less? Resale owners are left chasing the market down. MLS dashboards show more than half of all listings in Lee, Collier, and Charlotte counties have been marked down at least once. Homes now sell at 96% of list price, with negotiation expected from the outset. Open houses echo with the same question. What will it take to move this property? Meanwhile, builder incentives keep the pressure on, dragging comps lower with every closing. Cape Coral wears the unwanted crown as America's worst housing market, with 8% of homeowners now underwater, the highest rate in the nation. Naples, by contrast, remains a playground for the ultra-rich, insulated from the forces battering the rest of the region. The divide between luxury resilience and middle-market distress grows wider each month as every new builder deal resets the bar for what a home is worth. The result is a market where competition isn't just between neighbors, but between two completely different visions of Florida's future. Condo owners across Southwest Florida are facing a financial reckoning that goes far beyond falling sale prices. The Surfside collapse in 2021 triggered sweeping new safety laws, forcing every older building near the coast to complete structural inspections and set aside bigger reserves for repairs. The result? Special assessments ranging from $20,000 to $100,000 per unit, demanded upfront or in monthly installments that rival a second mortgage. Homeowners Association fees have doubled in some buildings, with insurance hikes layered on top. For retirees living on fixed incomes, the math no longer works. One Naples resident who paid off her two-bedroom years ago now faces a $44,000 assessment and a monthly HOA bill higher than her Social Security check. She's tried to sell, but buyers vanish when they see the fine print. The market has responded with a swift retreat. Condo sales across Southwest Florida are down 20 to 27% in the past year, with listings piling up in towers that once sold out in days. Appraisers now discount used condos by 15 to 20% compared to similar units in less hurricane-prone parts of Florida. The discount is not just for cosmetic wear, it's a penalty for risk. Buildings with incomplete repairs or pending assessments are almost impossible to finance, pushing cash buyers to demand even steeper cuts. Brokers report that half the showings end with buyers walking away after reviewing the association's reserve study. In Punta Gorda and Fort Myers Beach, some complexes have more units for sale than residents willing to stay. The value gap between new and old construction is growing wider by the month. Every new assessment, every unsold unit chips away at the equity owners thought they had. For many, the only way out is to accept a deep loss or stay put and hope the next hurricane season passes them by. The Florida dream for condo owners now comes with a line item for uncertainty that no one can ignore. A median household income between $57,000 and $62,000 doesn't stretch far in a place where insurance alone can swallow a third of a paycheck. Add in property taxes, special assessments for hurricane recovery, and civic fees, another $2,000 to $5,000 a year, and the math for home ownership in Southwest Florida starts to break down. The region's essential workers, teachers, nurses, police officers find themselves priced out of the communities they serve, with even longtime residents facing a cost stack that outpaces their earnings. Municipal budgets already battered by shrinking tax bases and disaster recovery bills now face a new squeeze. One finance official in Punta Gorda describes a city caught in the middle: rising infrastructure costs, fewer new residents to share the burden, and a growing list of unfunded repairs. We can't raise taxes much more, he says, but we can't cut services either. People are leaving, not coming. The outmigration isn't just a statistic. USPS change of address. Records show a steady stream of departures from Lee and Charlotte counties since Hurricane Ian, with up to 10% of households in some neighborhoods gone within a year. School enrollment dips, hospital admissions drop, and local businesses report fewer regulars each month. For families like the retired couple in Punta Gorda, the dream of a quiet life by the water has turned into a waiting game. Their home, once valued at $420,000, now sits unsold after multiple price cuts. Insurance premiums doubled, special assessments arrived, and the couple's fixed income no longer covers the bills. "We can't sell, we can't stay," they say. "We're just stuck." Construction layoffs ripple through the economy as new projects stall and builders and payrolls. Hospitality jobs, already thinned by post and tourism losses, offer little relief. The rental market, once a safety net, now traps owners with negative cash flow as short-term bookings collapse and long-term rents can't keep up with costs. Negative equity, once a distant worry, becomes a daily reality for those who bought at the peak. The comparison to 2008 lingers in every conversation. But the root causes have changed. Back then, bad loans and speculation toppled the market. Today, climate risk, insurance shocks, and the hard ceiling of local incomes drive the crisis. Solutions that worked before, rate cuts, time, regulatory tweaks, can't fix a region where the basic economics of ownership were no longer add up. For Southwest Florida, the question isn't just when the market will recover, but who, if anyone, can afford to stay. In October 2025, Cape Coral leads the nation with 8% of homeowners underwater and a 1 in 2,200 foreclosure rate, while Naples saw median home prices fall 19.2% from their peak. These numbers, drawn from regional MLS data and court filings, show a broad and unprecedented decline across Southwest Florida, not just isolated pockets. Hurricane Ian's $112.90 billion in damages and the subsequent insurance crisis, premiums rising to $15,000 to $25,000 annually forced many to confront the true cost of living on the Gulf Coast. Builder incentives, special condo assessments, and a 52% price cut rate reflect a market still searching for bottom. Yet critical questions remain. Will insurance ever stabilize, and can middle-class families return? What is clear from the data is that Southwest Florida's real estate values have been permanently altered by climate risk and affordability pressures. As of today, the region stands as a documented warning that the foundations of booming markets can erode almost overnight.